The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, welcome back here to the Diagnostic Trading Hour. Hope y'all are doing great today. Hope you had a great weekend. And let's check out where the markets are at right now. We got the S&P's up 14 points. The Russell's up 10. The Nasdaq's up 32. And the Dow is up 122. Copper right now is sort of flat on the day, but a lot of movement there. Gold is currently up $8.60. We got silver is up about 0.5% right now. We got natural gas down actually it's up about 0.25%. We got natural gas right now down a little over 1%. We got oil up a mere 27 cents. Corn up $6. That's over a 1% move on corn. Soybeans up $6. That's only about 0.5% there. Looking over at the euro dollar, it's up 58 pips. We got the Aussie dollar up 21. Pound dollar is currently up 5 with the dollar franc up 22. Dollar CAD over here, we got dollar CAD down 20. Dollar yen is up 14. Aussie yen is up 26. Euro yen is down 38. Pound yen is currently up 6. And the euro pound is down 32 pips on the day. All right, so that gets us caught up on where the markets are. Let's talk about news that's coming up this week. I'll do a quick overview for you, and then we'll dive into a little bit more. The ones that we have, a little bit usually more movement on, but we're going to dive into them. We had a U.S. core retail sales this morning, just not the greatest probability, so we'll dive into that. We'll reanalyze it. We got the pound CPI, which is usually a pretty good one. That one's coming out tomorrow morning, so we'll go into that in detail. And then we got the U.S. core CPI coming out tomorrow. And then we'll go into the Canadian interest rate statement is going to come out this coming Wednesday. That's usually a big mover. And then Thursday, we'll have the Canada core CPI. And, of course, there's always more announcements than that, so we'll talk about a few of the other ones as well. And we'll just walk through them. But those are really our main big numbers that we're going to be putting our focus and attention on this week. So first thing, we'll go in and we'll talk about the retail sales number that just came out this morning. The release on the number was 0.7 on an expectation of 0.5. So one of our strongest retail sales that we've had in a while. In the last few months, at least. Last time we hit the 0.7 was back in January, of course, coming out the Christmas sales. So it's actually a pretty high retail sales number. It excludes automobiles. That's what core retail sales means. And then, retail sales has, everything built into it. That was 0.3 on expectation of 0.3. However, they did revise down the last couple numbers, at least on the retail sales. They had to revise down the number, actually, negative 0.6. So it was negative 0.4. They put it down to negative 0.6 on one of the previous numbers there. But that was in the last report in March. For February, the good news is this time around, they actually revised it up. So the core retail sales, last time it came in at 0.3. This time it came in at 0.3 for the revision of last time, meaning no revision. And the number exceeded expectations. On retail sales themselves, this time it came in at a 1.1 over 0.8, so it actually exceeded expectations. And they revised the last number from 0.3 to 0.7 from the March number up to the the April report here on the previous month's retail. So instead of revising down like we've been in a trend of doing for quite a while, the last few months we've revised the numbers down backwards. So not only was the number better than expectations, but the revisions were also an increase and better than expectations. So hence the market rising on up. All right, so understanding that, what do we got? Looking over at the retail sales numbers, what are the usual expectations, and what are some of the ways that we could have played it? So usually the most volatile pair on the retail sales is actually the euro dollar. So understanding that the euro dollar is usually the most volatile out of the group, then let's go in, let's look at it and see some of the ways that we could have played it. And is it really worth it? Because, what I found looking over at the past, couple years, yeah, we got some volatility. Looking at the last 12 months, just not enough consistency in that to make it worth it. And before we look at the past, let's go ahead and just look at what happened today. And I'll pull up a chart for you, and we'll just go through, just looking at euro dollar on it. Like I said, it's had the more consistent, larger impact, but that large impact is at high to low. And that high to low can be a little bit tricky on you, because it goes in and it'll tell you, again, the high to low. It won't tell you the release to the high or the release to the low. And so that's what I really want to focus on when I look at this report, is the release, because obviously I'm not getting in at the high or the low. And so the number, when did it come out? It came out at 8:30 in the morning. So we'll mark that right here, release. Let's see, let me bring up my crosshair on this. We'll go over here to 8:30. Looks like it actually came out a little bit early, but look at that movement there. But there we go. We'll get in. Let me go down to, I'll get 5-minute charts. That makes it a little bit easier, because we get right on the minute there. Okay, so basically we had a release right there. Okay, and maybe mark it here. It might even be a little bit better. Right there's where we got a release. And it wasn't a big move. One thing to account for, we're already down a deviation for the day on the euro dollar. Okay, I was moving at it, gapped down. It did not even bother to even think about filling that gap back in. Look at that massive gap down on the euro dollar. There's a lot of negative movement. It gapped down, over half a deviation, popped back up to half, and then ran on back down. Literally one full deviation from the high of the day. Even though it's a 1.5 deviation from yesterday's settlement, that was a 1 deviation just from, today's movement. Not accounting for the gap itself. So understanding that we've already had a lot of movement, a lot of shorts kicked out, a lot of longs. The orders have been filled. So it's not a surprise that we don't get a big move on it. Now let's look right here. Only about 17 pips to the downside, and the high to the low, to about 11 o'clock there, about 20. All right, so that's on a trade that historically high to low has actually got about 60 pips, but it only gets it about 50% of the time. What about the last 12 months? And as you start understanding these stats, you start being able to put together the pieces to be able to do the correct trade on that announcement. One is, it's moved down a lot. Therefore, I expect there to not to be a whole lot of additional movement. That's a reasonable expectation, because we've taken out most of the order flow already. 2, it only moves that big number about half the time. Well, if it's already moved this big, this early into the hour, the chances of it moving this big are pretty small. Okay? So, we don't want to, be having that happen. Basically, we want to make sure we set ourselves up for the best trade, and the chances of it going and moving further are really, really low. So that 50% probability of it exceeding 50 pips and that 50% probability of it not, we're probably in the 50% of it not, just because we've moved down a deviation already. But now let's look at the last 12 months. Let's see what we got. Well, let's see. Last month we only got about 16 pips, okay, from release to about 20 pips. About 20 pips down. It's about the biggest move we got. If we go after that, we got about 18. Okay, remember that 60 was high to low. Notice how we might go down 20, we might go up 40. That could be a 60 high to low, right? Doesn't mean 60 in one direction. Look at that again, 18 pips the month before that. Month before that, we got about 23. Month before that, now we got a big one the month before that. Okay, it shot like instantly about 45, 50 pips. Ended down about 70 pips right there. Month before that, moved up sort of slow, actually, off the release. Ended up about 40 pips up by around 10 o'clock, okay? And then, or by 11 o'clock, actually. It took it, last hour, it really took off. Before that, we're looking at about 25 pips or so extreme range, and then 36 to the downside. So that would have been like a 60-pip move. 25 up, 35 negative, so 25 pips higher than where it started, and then 35 pips lower than where it started. That would have been one of those 60-pip moves. So it didn't really paint the true picture for you. It's sort of like whenever you hear on the news, they're like, the market's up, Actually, they'll say that the market's only up 2 points on the day. Well, they don't really account for the fact that it dropped 40 and came back up 40, or 38, or 42, or whatever. So they're not giving you the whole picture. High to low doesn't necessarily give you the whole picture. You want to know open to high, open to low. So go on and we look at last August. We got to move down pretty quick for about 30 pips, and then it drifted on down about 55. That was an actual, big release right there. Looking at July, we got a move going into it about 35 pips to 45 pips. Before that one, we had a big drop down about 40, but then it pulled back up to only 3 off. And then let's see the last report before that one. It shot down 25. It shot up 25. It settled out at about 10 off. And then if we go back to last April, this time of year, it actually shot down 25, and then it shot up positive 32. So we had about a 50-something pip move right there, about 52, 53 pip move, high to low, but only 25 down, 35 up. Why am I saying all this? Well, basically, if you put all the pieces together on that, you're really looking at an iron condor, okay? Because there are only like 1 or 2 instances where it really moved a lot. If you can get $35 to $45 on the trade, then, and I mean, we're talking 10 or 11. So the 11 o'clock is going to give you a little more premium. The only difference really that I see is every once in a while, between 10 and 11, it may make an extra 10 pips or so. So it may not be worth it on a couple of those trades. To actually have that 11. You might be better off with the 10 if you can get the premium you want. Now remember, the 11 o'clocks, they'll start as early as 7 a.m. So you can actually have like a 4 o'clock expiration on there. Actually, they start earlier than that now, don't they? They start. They have the 7, then they have the 11, then the 3, and then the 7. So actually, yeah, they start pretty early. You can get in pretty early on those, on the 7 a.m. spread expirations for iron condors. So you can get a lot more time premium, which means you can get it wider, easier. Honestly, that premium was probably decently built in, being market open, everything else, and after that big fall, implied volatility should have been higher. So you should have been able to get a pretty decent price even on the 10 o'clocks. But I'd either be looking at 10 or 11s, iron condor play, really the best way to play core retail sells. All right, well, let's go ahead and talk about what we got going up, because that was the past. Let's talk about the future here and what we got on the roster. Okay, so on the roster for this week, like I said, I think our next trade here is going to be on the pound. And so look over here at the pound dollar. Pound dollar is going to have its CPI coming out. And CPI, again, high to low, about 80 pips or so, about 70 to 80 pips on pound dollar and pound yen. So pretty nice move right there. And it happens at 4:30. So this is one of those trades that we're going to see if the stats line up well enough for us to be able to hop in and maybe put the trade on at 11 or 12 at night, because they start at 11, they go to 7. So we're going to look at that and see, do they start at that time, and maybe we can actually find a good trade where we don't have to be up at 4 a.m. in the morning. We'll talk about that when we get back from this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
TFNN is back with another Tiger Dollar special, and as part of this promotion, not only can you receive up to a 25% bonus on whatever you spend, but you can also gain access to a 5-part live webinar series with Tom O'Brien taking place the week of April 28th. Each morning during the week at 8 a.m., Tom O'Brien will walk you through how he sets up the market live and digest the previous day's trading action while analyzing overnight markets abroad in order to anticipate what kind of trading day to expect. Each 60-minute live morning webinar will be archived by around 9:30 a.m. that very morning, so that if you can't attend live, it'll be available for your viewing pleasure on demand whenever you're ready. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire, so now is a great time to lock in extra savings on all TFNN products. Don't miss out on Tom O'Brien's 5-part webinar series. Get your Tiger Dollars today with up to a 25% bonus on whatever you spend before this special is over by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, come on back here to the Diagnostic Trading Hour. All right, so we're checking out the markets. We're talking about that pound dollar coming on up and seeing what all we have available. And, constantly having, different trades and the news. And a lot of people go, news, what about, I don't know about news. I've heard don't trade into a number. Agreed. Don't trade into a number unless you have a hedge to significantly limit your risk. Don't trade into a number unless you're trading at Nadex, because basically think of it as using call and put options or call and put verticals almost. But it's more of like buying a call and selling a higher put than it is buying a call and selling a higher call, if you actually look at the actual model. And you can go in and really, put on some pretty sweet trades. And you got to learn a little bit, but it's not as hard as people think it is. May not be as easy as you want it to be, but it's not near as hard as you may think it is. So, and I'm here to help you learn how to do it as effectively as possible. So we got that core CPI coming up. There's always, new and different trades happening. And there's a lot of different ways to trade on Nadex. So, what is the best way? What is, different trades we can do? And I might even see a potential trade I'm watching right now. Just on one of my screens, I'm actually looking over at the NASDAQ. So we get a little off track here. But I'm looking at a potential reversal here. It'll pop up. Might be able to make some money on that. We'll see. I got my eye on it. And if I do decide to take the trade, I'll probably be looking at about a 34.67. So on the NASDAQ for the 2 o'clock expiration. Just to give you a heads up there. And just looking to see if it breaks the current bar's high or not. Okay, so with that, let's go over and let's sort of walk through step by step. Like I said, I got that trade over on the side. And just looking for it to break the current bar's high on the next bar. Give up a little bit in time there, but I'd rather get the best trades at just top in. And let's see. And then let me get one more piece up for you because I want to be able to actually bring up some stuff in Nadex and show it to you versus just talk about the theory of it. And let's see here. Got that piece done. Okay. So that gets everything uploaded. So just for this, I'm going to be doing two things simultaneously here, but I got a potential setup over here on the NASDAQ and watching, looking for the high of this bar to be broken. If it is, once it closes out, got to wait on it here for a minute. But if it is, then I could have a nice trade. And just sort of looking at price levels, this is definitely an order flow area. We had a bunch of orders here this morning. It's trying to see if it can break below it. So I'm going to be really cautious if I try to get an entry to buy below that. But if I get an entry above it, then I like that. And so we'll see where this bar ends up. But we're at a major, as far as today, order flow area. The market drove the price up. Let me zoom in. I'll show you this a little bit more clearly. Drove the price up right in the morning. We had a lot of volume, capped out right where we're at right now. Okay? A lot of take profits happening right there and selling going on down. Pops back up, goes back up for that area, and busts through it. See, with exceeding volume. And that volume is higher and higher and higher. So it goes back down, comes back down pretty much to that same area, okay, with really low volume, not a lot of strength. Comes back up, goes back down, actually hits that area with a lot of strength. Exceeded volume on that breakdown. We then closed up, so we got an up close there, but this bar's starting to push on back down. So with that exceeding volume, that break below, we're breaking down with some pretty good volume. It may continue on down. So I'm going to hold off on that buy at the moment. All right. Let's see here. Just wanted to look at that trade because it matches up with one of my setups that I do, which is if I close down on volume and then reverse on light volume, then go into it. But I can tell we're at definitely a major support resistance level. If I was going to buy on this trade, the contract I'd be looking at, and we can find it really easy. We just use a scanner. Go over here and go, okay, well, I want to buy basically a strike that's, sort of at or above the high of this bar, which is 34.69. So if I was going to, I'd be looking at 34.67, and I'd have that one ready to go, okay? But I'd make, at a minimum, I'd make price break the high of this, so 34.69 right there. So it'd have to go at least 34.69.25 before the end of this 4-minute period to get it on a buy. I'm really watching this volume to see. I think we're going to get more pressure down now that we've broken back through that. What has been resistance and is now support level. We broke back through that already. And it looks like we're getting some selling pressure to the downside. Stay right there. We'll be right back after this break. We'll try to make sure we wrap up this pound dollar before the show's over. All right?
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, come on back here to the Diagnostic Trading Hour. Okay, so we're talking about this pound dollar over here, and we're going into the announcement that's coming up on it. I want to talk about it and look at it as the CPI report that's going to be released at 4:30 this morning. And we're going to go in and basically figure out what's going to be the best way to play it. Is it going to be pound dollar? Is it going to be pound yen? Also, either way, we're going to want to do spreads on it. And are we going to do iron condors, or are we going to want to do straddles? And again, the number I gave you, yeah, looks like a great straddle, but that's high to low. So we want to be able to look at, release to high, release to low. So that's the detail I'm going to go into for you right now. And let's see here. So we're going to try to take this thing out to 7. I'm going to go and I'm going to pull up some information on my other screen. There's only so much I can put on this little screen at one time here that I'm broadcasting. But so again, pound dollar or pound yen, which one's more or less volatile? Obviously, the pound yen usually is more volatile. Is that the same on this one? So first, we'll just go through pound dollar. Looking at about a 7 a.m. expiration. Last trade, basically from, let's see here. Let me see if I can pull early release, because what we're really trying to do is see, is it possible on this trade to get in around midnight, and how much of an impact could that have on the trade? Well, let's see. We can actually get some pretty big moves between midnight and the 4:30 release. So if you're going to do a straddle, you definitely are going to have to enter that early on a couple of these. But let me walk through each one. I'll talk to you about it. We'll go through it and just have your notes ready to go, or you can use the replay. On the last release, we had little to no movement between midnight and the 4:30 release. By 7 a.m., we only had... I'm using the 7 a.m. expiration, looking at that as your expiration there. We only had about a 30 pip move. So, easily an iron condor on that one. On the next one now, we had a very small move between that and 11. About 30 pips again, okay? But we had about a 60 pip move between midnight and 4. So if you would have got in that trade at that time, then you would have been able to put that together, okay? It would not have worked out well for you. As an iron condor, you probably would have lost on the trade. I mean, it pulled back on. Well, let's see here. It pulled back. It dropped down 60, pulled back 30. You would have had about 30. So it would have been about break even on the trade. That's actually good. So that iron condor would have worked out at least as a break even. Looking on over, maybe a little profit. Looking at the next trade. Let's see here. 11 o'clock on that trade. We have about a 20 pip move. Okay. And let's see. So about 20 pips off of the release. And it had about a 70 pip move before it. And so 11 o'clock, that would have cost you some money getting in early. So the straddle would have worked on the last couple, actually, getting in early. And iron condor on a couple, one would have been close, one would have been break even. The straddle would have worked. A lot of times in the iron condor, a lot of times both of them can work because the straddle takes profit when it hits 1-to-1, whereas the iron condor will let it move, really close to 1-to-1, maybe even a little bit further than that, and come back. So you could have literally a straddle and an iron condor. Both of them could actually be profitable on the trade. Sometimes what I'll do when I see that is I'll actually place both sides. Let's see here. I'll go reverse on the trade, not just get out. And then let's see. Looking over at December, we had about a 25 pip move, and then going into 11 o'clock, we had, let's see here, about a 65 pip drop. So definitely a better straddle. I'm starting to see straddles winding up. That's what I expected, but it's definitely adding up. On some of these, you'd actually take your profit before the news even came out. Same thing on November. I'm looking on over again at October, straddle. Looking back at last September here, we got a move about 40 pips high to low. I mean, if you're hopping in right before, most people aren't doing. So I'm trying to come up with a plan for putting on at midnight. We got a move of about, let's see, from release, about a 50 pip move. That's about 25 up and 30 down. So that would have been a tough one. And then it ended pretty flat at 11 or at 7 o'clock there. So 7 or 11, depending on what you're going on. So you're probably going for 7. So on the 7 o'clock, really not the big move that you want on the trade. Let's see. Looking at last July, we got a drop of about 60 pips before the release, and then it bounced back up. So as long as you took your profit. And looking at June, it moved on down. That was a great move, 70, 90 pips on the trade. Looking at May, 50 plus for about a 90 pip move. And this is talking about starting at midnight. Looking at April, let's see here. We got about 35 pips out of the trade, so close to a break even or maybe a small loss on it. So yeah, there's no iron condor in this trade unless you're going to get up at 4 a.m. and trade it. Then you could iron condor it. But beyond that, I definitely, because the thing is there can be so much movement tonight. It's actually pretty common. A good majority of the time we get a nice big move on the pound actually before this announcement comes out. So I'd stick with the straddle. And, looking at the 7 a.m. On that trade, and that's one of those, you really need to calculate out your risk-reward profits. If you want a really conservative straddle, go for like a 0.5 or a 0.75 to 1 reward-to-risk ratio, meaning let's say you're risking 60, go for 30. It'll hit it really easy because you're not up to manage it. So what if it only moves up just enough and then falls right back down? So I'm just trying to say, if you want to put a trade on that has a high probability over the last 12 months, do a straddle. If you want to increase that probability higher, you increase your risk, you'll decrease your reward to risk ratio, but you'll increase your probability by taking it sooner, is instead of going for that 100% return, maybe go for a 50% return on the trade. And there are plenty of them that definitely hit 100%, but there's some of them that you would have given back, almost all the profit if you, and actually taken a loss on some of them had you had held on. So it just depends on, maybe do half and half. Just depends on how you want to play it. But if you take off 50% on half your position, then you've reduced, your risk by 50% on the other half. And that way you're not in that total risk position. And then if it loses some, you can actually still profit. If it loses all, of course, you'd still be down only, a small port, like 25% of your original risk. And if it makes all the money, then you could be up a net 75% on the trade. So if you're going to do one contract, probably 50%. If you're going to do two, you could do a 50% and a 1-to-1 take profit. So if I'm risking 60, I want to make 60. I just have to consider the factor of how far does it have to move. I want to look at the deviation levels. So those will be published. We publish those every night by about 8:30 p.m. Eastern time. So make sure you get access to those because, if I have a deviation, like let's say my take profit, on my 1-to-1 is right, let's say it's right over here, okay, like right at this level. And actually here would be a better example. Let's say it's right here. Okay, so right at this price level. Then I'm going to want to move my take profit, and we've seen this a lot. I'm going to want to move it up in front of that deviation because I expect it to bounce off of it because that happens all the time. So I want to be in front of that deviation, not behind it, so I can actually have a much higher probability, give up a few pips in order to increase my probability. You don't do it because you're afraid of winning or losing. You do it because it's what is wise to do. It's what the chart says. So, just putting those different pieces together will help you be a lot more effective on doing these trades. I think it's all about the straddle or strangle. Would be binaries or spreads. I prefer straddles because if it doesn't hit your take profit, you often make a little bit, lose a little bit, break even pretty easily. On the strangles on the binaries, you either lose it or you make it, okay? And then we go over to what about butterflies or what about condors? Well, on butterflies on the binaries, they're great because you get max profit if it expires in your range, but if it doesn't, you really get nailed on them. Spreads on iron condors, you're going to probably not get max profit unless it's right in the middle, but you're also probably not going to get max loss unless it just insanely explodes, okay? So you're probably going to get about a 50% of max profit on average and about 50% of max loss on average on your losing trades. So you just got a lot wider range and a lot better risk control on the spreads than you do on the binaries for these neutral and breakout strategies. Now, the thing is on the iron condors, you got to have time. You got to have like a couple hours. You can't do them with like 10 minutes to go. Just there won't be enough premium in there. You can't do them with half an hour. Really, even with an hour to go, usually, unless it's very IV-based, meaning like a very strong implied volatility, like an FOMC or an interest rate announcement. Usually you have to get out 2, 3, 4, 5 hours in advance to make those work. Butterflies, you can do those, with 20 minutes on the clock. So that wraps up pound. So pound, we're going to vote straddle. We're going to vote enter at midnight, okay? And we're going to vote set those take profits at least at a 0.5 to 1. If you want to, at a 1 to 1, or do 2 straddles. Buy a spread above the market, sell a spread below the market, take off half of your position at 50% profit, take off the other half position at 100% profit on that trade, and go to sleep. So you just sort of enter, set take profits, and leave it alone because there's nothing you can do about it. You control your entries. You don't control your exits. So you control where you put your exits, but you don't control which one's going to get hit first, okay? So, there's no reason to be up at 4 a.m. and worrying about it because you can't do anything about it. All right. That gives us our information right there for the pound. Just to give a quick summary on some of the things coming up this week, I want to go over and also cover, we talked about some of the news announcements, and probably one of the biggest ones we're going to have is the Canadian interest rate coming out. But what I wanted to see is if we're into our full throttle. Earnings is rocking and rolling now. So what do we got coming up on the earnings calendar this week? The big Dow and NASDAQ indice movers. Okay. And let's see. So Coca-Cola is going to be coming out on the Dow tomorrow morning. So that's KO. So, and then let's see here. We're going to have Johnson & Johnson on the Dow coming out tomorrow morning as well. About 7:45 is when that release. Let's see. They usually, they're wired. And by the way, I'm talking about wire release, not press conference. Okay? So the wire release there. And then 7:30 on Coca-Cola, wire release is what's on the expectations here. And they don't tell you what the wire release is. You have to literally go back and do all the research to find it. Intel, looks like 4:15. Okay, so not just 4:15 date, but 4:15 time. So right there, you want to be aware of that one. So Intel, being in the Dow and the NASDAQ, can definitely be a market mover. Can even have a little bit of a shake-up there at the end of the day tomorrow. Okay, so make sure you're aware of that one. Looking on over, we got one of my favorites coming up this week. So we got Google coming on now, and that's going to be this Wednesday, April 16th. And it releases right at like 4 o'clock and usually a second or two. And obviously a big mover on the NASDAQ. So you have to really get the right, like that's the perfect time, like a 4 o'clock release. 4:15, you may get volatility, you don't get enough confirmation. In the mornings, they're not like right before an expiration usually. But like Google and NASDAQ, great for binary trades. Okay. Let's see here. Then we're also going to have IBM coming out on the Dow. That'll come out at 4:10 is the expected release time coming out on April 16th, this Wednesday. We'll go on over at Thursday. We're going to have General Electric coming out over on the Dow. And the release time is about 6:30 in the morning, so really early. They're on the Dow. And let's see, beyond that, of course, we got weekly inventories on Wednesday, so you oil traders don't forget about that. We got natural gas storage on Thursday, every Thursday there. And then Friday, most of the market's going to be shut down. So we're going to have Good Friday coming on up. And so plan on the 4-day week. So that gives you sort of the summary of the news trades for the week. We can look ahead a little bit and see maybe what we got going on for tomorrow and how we might be able to take advantage of some of these other trades. I'm just sort of scrolling through them and seeing what else we got that we can do. But yeah, that NASDAQ one really has not, it sort of tried to pull up there, but it wasn't able to do it. Go here and look at it. We went over, we're waiting on that break of that high. We didn't get it right here. We got, what is that, a gravestone doji or whatever. Usually means the market's about to drop down. And on high volume there. Tried to push up above it. It's pulling on right back down. So did not break that high. Didn't get that long confirmed entry on that side. And let's see here. What do we got that we also might be able to do going into the close? I'm just trying to see if there's anything just easy and on the list here. All right, yeah, so nothing else really that this trade just never confirmed. So, okay, so as far as looking at the spreads and the iron condors, if you haven't done those before, it's definitely something to learn about. You can hop into the website over at TFNN and check it out. And always doing webinars and stuff. Be glad to help you out, okay? All right, stay there. We'll be back right after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of of shorting and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, come on back here to the Diagnostic Trading Hour. Okay, so just looking at, different trades that we have for the week, but I just want to remind you, we get that pound dollar, and to make it clear, we are going to look at a straddle. We're going to be looking at entering around midnight for the 7 a.m. expiration, buying the upper spread, selling the lower spread, and if you're just doing one, take profit at 0.5% of your risk. Try to keep your risk to less than $45. And so if your risk is $45 and you want to make sure you make the risk on the other side, so the total risk, okay, or the simplest way, the total risk plus half the risk, so 1.5 times the risk. But you just want to look at that and go, okay, what is my total risk? If my total risk is $40, let's say my risk is, it's not always balanced. So let's say my risk on one side is $15. So 40 plus 15 is $55. And so if I want to make, 1-to-1, I need to make $55. If I wanted to make 0.5 to 1, then I only need to make like 27. So I go, okay, where did I buy? Okay, how do I make the risk on the other side plus 27? So if the risk on the other side was 15 plus 27, that's going to give me, 42 pips? So, and so I'm going to go in there and put that trade on, and I'll, double check my math. You know, just use a simple calculator. 15 plus 27. Okay, 42. So 42 pips higher than where I bought. If my risk on this side was 25 pips, then I need to make, okay, I need to make all that money, make that 25 pips back, because that's going to be a total loss, plus half of whatever my total risk was. So if I go in, and again, if my total risk was say $40, then I need to go in and make $20, plus I need to make, say, the 25 on the other side, and make 45 pips. So just add your total risk, plus add your risk on, and multiply that times 0.5. And then add your risk to the other side. So, again, if I have 25 on one and 15 on the other, half of that, plus to net out and keep that $20, I need to keep the risk on the other side. So if the risk on the other side was 25, I need to make $45. If I had 15 and 25, multiply that times 0.5, I need to make 20. And if the other side had $25 risk, or $15 risk, let's say, on the buy side here, because the sell side had $15 risk, then I need to make $35 on the trade. Well, pretty simple. $35 profit just means set your sell on a buy, set your sell 35 ticks higher. On a buy, you know, we said we had to make 45, so we're going to go in, we're going to buy back 45 pips lower on our sell side. We're going to set our take profit 35 pips higher on our buy side. And it takes a little getting used to. You'll probably have to go through and start doing these trades. And what's sort of funny is people don't think about this, but you don't have to wait on news to practice this. Get a demo account, hop on TFNN.com, click on the Nadex banner on the right side of the page, and then go in and sign up for a demo. It's right under trading. So again, you just go to TFNN.com, click on Nadex again right here, and then once you go over to the Nadex page, then click on trading, click on demo trading account. Fill in the username, first name, last name, phone and email address, click apply for demo. And just start doing straddles every hour. And just get used to, because here's the hardest part on straddles. It's not the straddles. It's not the iron condors. It's the math. And the math is basic addition and subtraction. It's really, really, really easy. So what you need to do to be effective at that is you need to go in there and just start putting them on and just working out the math like every hour. Okay? And it's not about winning or losing. Okay? It's about just learning the math. You're not even trying to make profit on the trade. You're just trying to go through the mechanics of the trade. So that way, when you actually do have the right trade, such as a CPI number or an interest rate number, FOMC, or, you know, employment or whatever, you know the math, you know exactly what to do. So just practice those each hour. Really quick, you'll get, or very fast, you'll get very good at them. All right, you have a great day. I'll see you right here tomorrow on the Diagnostic Trading Hour. Stay tuned for another great show coming up for you right after this.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.